All right, hey there. Good morning, everybody. Christopher Inks with Texas West Capital on a very volatile morning. Something I warned our members about, obviously, with old Powell coming out and talking there at Jackson Hole this morning, first thing around 10 a.m. Central or Eastern Standard Time, right? So I'm coming at you live here a few minutes after 11 a.m. Central Standard Time from an overcast, kind of burning morning. Man, hopefully you guys are doing all right. Hopefully you weren't trying to be in a trade during the time. I know we got knocked out of a crypto and a forex trade there with that volatility this morning, which sucks, especially because the forex trade it ended up continuing going toward the target. But you know, it is what it is, guys. That's why risk management is so important, right? So man, yeah. So that's the big news right now, right? So we got Fed, we got Powell out there, and we'll talk about that in a moment. We had the markets reacting. Bitcoin pushing out a little bit lower. The stock index is pulling back, pushing down lower now, which seemingly makes it look more and more like a top may be in for them. The dollar, though, we'll talk about that. Looks like it may have only printed a leading diagonal down. So we'll take a look at that one as well, because that would have a longer term effect. What happened just this morning could be nothing more than knee-jerk reaction. And, you know, as the market digests what was said and what it actually means. You've got the very bearish people who thought he sounded hawkish at the last Fed minutes, his speech after that and everything. And then the Fed minutes didn't show that. They showed a more dovish tone. You've got those same people this time out saying, oh, he's looking really, really hawkish. But I think there were some things said that he may be put in there saying, you know, kind of getting you ahead of the, getting you ready for potentially them to slow down here coming up. But again, you know, we've been looking at these higher Fed rate, interest rate hikes to happen through the end of this quarter into the beginning of next quarter. So basically September or so. And, kind of looking for, potentially to pull back from there. So a lot of it's going to come down to now, what are those employment numbers? And especially what does the CPI number look like next month? I think that's going to go a long way. If those, especially CPI number, are lower than what they were this last time and continue to drop, I think that's going to be a strong indicator to the Fed to, hey, start pulling back. It doesn't mean they're going to stop raising interest rates at the moment. I think they continue raising little bit by little bit there into next year. But the big ones, which is what we've been talking about, right? The 75 basis points, maybe even 50 basis points, kind of slow down and maybe dissipate after that. And so, that's what we've got going on there. So, man, oh, man, that was the big stuff this morning. How y'all doing? Deadly123, what's up, man? Bamboo's here. Mark. Jonas, what's going on? Hank is here. Andrew Bennett. Data. Sarang. Hello. I always feel nervous about saying your name, and hopefully, I always say I hope I don't screw it up. So, Baltazar is here as well. Crypto Critical. He says, yeah, the sky's falling again. Yeah, everybody kind of feeling that way, right? But we'll take a look at a few things. Data says, I was long and short. It was wrong both times. Shame on me. Hit the top, though. Cough. Yeah, it happens, guys. I'm not a big fan of trading volatility. Knee-jerk reactions are what they are. And it's funny. A lot of market participants still kind of base their whole trading on news events, right? And so if something happens, if you get a knee-jerk reaction with a news event, then they're like, oh, look, it caused this change, and they look at the overall market structure and say, oh, that caused the change. And then when it's only a knee-jerk reaction and goes back the other way, they use the same reasoning to say, oh, it wasn't, right? And so this is a big thing with when you're looking at socioeconomic theory, that idea, right? So we'll talk about all that here. I'm pronouncing it right, Sarang? Oh, man, that's awesome. Glad to hear it. Thank you. Andrew asked, are the hawks out? Yeah, they are. Again, they're going to feel pretty hawkish about it. I don't necessarily... Listening to what he said, first of all, the speech there was the shortest one, I think, since like 2010. He was expected to speak for 30 minutes. He spoke for what, like 8 minutes? But within it, it does seem like maybe it has a bit of a hawkish tone, but there's phrases and things he put in there that makes it sound like, listen, I don't want to go out there completely hawkish. I'm thinking that maybe we might start pulling back here on what we're doing. And so I'm going to put in these words to kind of be able to look back and go, see, I told you that you should be preparing for us to potentially be pulling back, that we weren't like all gung-ho, everything's going up. But he did kind of look at things, in terms of the past, kind of referencing the 70s there. And those of you that have paid any attention, the 70s had that rise in inflation that led to Volcker doing his thing in the 80s, the early 80s, where interest rates just were stupid, right? To try and, supposedly to try and calm it down and whatever. And I think a lot of those who feel that he was really hawkish today are kind of, they've already in their mind, they've set this idea that he's going to do that same thing. And I'm not convinced of that yet. So we'll see, right? Yeah, quoted Volcker. I know. Funny stuff, huh? HJ, what's up, man? Wazobia, good to see you checking in. Brian, Friday free fall, he says. All right, guys. Hey, listen, you can join us here at howtotradetowin.com. We'd love to have you there. That special we are running currently on, across social media. You see, I've posted it there. You can just come here, go up here to join us, go to the annual tier 3. You will get it for 1/2 off, 50% off, guys. And once you do, just DM me over there on the server, on Discord there, and I will give you 6 months free access to our Signal service, whichever one you prefer. So whether it's crypto, U.S. stocks, or FX. By the way, our U.S. stocks, we're going to do something. We're going to add a little bit something in there. Let me see here. What was I just saying? Man, I just lost my train of thought. Oh, yeah. So we've always got these a little bit larger targets, and whatnot. And I was going to start it today, but with Powell doing his thing, I decided not to. No reason to jump into a trade right before, right? But starting on Monday, I'm going to start posting a few more like daily trades. That are, the signals are designed to complete that day, usually within a few hours. So I'm going to start posting those at the beginning of the day, pre-market, for the stocks there as well. So anyway, yeah, so you can do all that there. We'd love to have you there, guys. By the way, one other thing, I did post a link here for Elliott Wave International. They've been doing this this free thing again, guys. They've got this thing called Trader Education Week. It started on the 22nd, so 4 days ago. It ends on the 29th. And if you sign up for that, and it's free to sign up for, by the way, guys. It doesn't cost anything. You don't have to put your credit card in, nothing like that. But you can get, what does it say here? 5 free trading lessons. And then today's lesson, for instance, is on how to manage risk. So if you want that, guys, here's the link right there. Copied it right off the my Twitter page there. So you guys can jump on that and get that. I mean, I'd always, guys, I would always say take advantage of whatever free alpha and education you can get from those of us that are more established and noted in what we do. And Elliott Wave International is definitely one of those ones there. I'm a big fan of theirs, guys. I think I've got a great relationship with them, and I do for a reason. Again, I don't partner with very, very many at all, just a few companies. And that's because I take the fact that y'all potentially listen to what I'm saying seriously, and, don't want to send you up with something just to make a few bucks. So, yeah, anyway, there you go, guys. But we'd love to have you here at howtotradetowin.com. By the way, for the first time ever, so I have released lifetime memberships for TWC twice now. This is only the second time, was this past a few days ago. And we've got 2 more lifetime memberships available. And so if you want to see what that entails, it's first come, first serve. I've just released it. I've never released it to anybody that isn't actually a current member. So, it's always been just current members. This is the first time I'm actually releasing it to everybody else. So we've got 2 left. So if you're interested, right there's the link to Discord. Jump in there. You can see all what's included in it, whatever. DM me, and I will do it on a first come, first serve basis. So I'll go through you guys in order for the DMs. But it's just 2 more left, guys. So if you're interested, jump on it. If not, that's what it is, right? Dime, is this an infomercial? God, I don't understand why people have to be such idiots. Seriously. I mean, it's the start of the show here. I've got some things I want to talk about. If you've got a problem with that, move on. It is what it is. I mean, seriously, guys, I get people out here and they think they deserve free stuff for the cost of nothing, just because they're breathing. That's the problem with today's generation. You guys don't know what it feels like to work for something, right? You don't understand the importance of actually paying for something. Anyway, I'll go on to the free stuff now, even with the remarks like that. Man. So either one of two things is going to happen here. Either Dime is going to get butthurt about what I just said and go throw a little fit, in which case we'll boot him. Or he's going to say, okay, yeah, I was being a jerk, and I'm going to be more respectful now. So, these are those points in life where you kind of decide how are you as a person in life. So we'll find out, right? Just get ad block. I don't know what you're talking about, George. Oh, are you talking about the ads that are on here? On the YouTube thing? It is what it is. All right, guys, let's go ahead and jump here and kind of see where we're at. He's trying to save a dime. Yeah, we're all trying to save a dime, right? I'm giving lots of damn discounts here, that's for sure. All right, so, man, we've had so much sideways here. We've kind of gone over the last week or so about different possibilities, as far as maybe, wave 2 was done here, or maybe it had a little bit further to go. We broke down below the swing low. We almost hit my target to the dollar. So we hit here at 26.023. My target was 26.22. So we hit, we hit 20,623, just $1 above my target there, that red line. And then we've got this little pop up here, right? Okay. Oh, just a joke for those complaining about plug, George says. Anyway, guys, hey, listen, if you're new here, I'm a pretty nice guy. But I also, I'm one of those guys that's worked my butt off to get where I am in this life. And it really is the way it is, guys, as far as working goes, Oh, here we go with the drop down lower here. So we'll get to this now. So we said if we get the drop down through this this purple range here, then we're going to look down here toward this daily S1 pivot, this 1 hour S1 pivot, 4 hour S1 pivot right down here. That gets us not even quite to 70.5 on the retracement, okay? As far as this coming down, quite likely is an A and a B, and then we'll get a C down here, okay? With that, I think we look at maybe like a 1. So maybe this might be an ending diagonal here. We can go A, B, C as 1, 2, and then we get an A, B, C as 3, 4, and then we get an A, B, C as 5 as an ending diagonal. I think that's a possibility based on this drop here. The other thing I was kind of looking at was if this is a wave B here, maybe this was an A, and then this was a flat for a B. And then we had, this was A, this was a flat for a B, and then we had C coming up maybe. Which would probably, at this point, we've dropped down below the swing low here, should then probably have price rallying up here toward the daily pivot. So we're going to see about that. I was looking at this range here as this right here maybe being some sort of terminal shakeout maybe. Because what you'll notice through the range here is we have this drop off of volume, and then we just have this big spike of volume here as we dip below the swing low, right? So on the 4 hour, we were looking at it potentially to be a swift, can't even say it, swing failure pattern here, because it dips down below and closes back up above the swing low there. But we did get this further down. So, I mean, this could still be on this larger time frame, potentially that, right? If we jump out here to the daily, all right. So look at the daily. So we kind of want to see, how does this daily close, The other thing is this as far as the daily goes, is this a swing failure pattern here on the daily, right? So the daily, what we would look at is we've got this swing low right here at 20,715. Let me see here. Yeah, and then these are still above it. So this dip here, do we close back up on the daily above this swing low here? Now, as far as the swing failure pattern goes, I'm kind of iffy because this is a daily time frame and we're only looking back here about a month. Usually we're looking for a few months or something like that. But, I'm willing to give it a shot. I'm willing to see what happens here. I've been discussing with Discord, with our members, about how everybody was expecting the breakdown here to be some large breakdown, like the breakdown here to take them down to 14,000, 12,000, whatever. And I've been talking about, with such a what people are thinking, such a bearish thought out there, across the general market, that I wouldn't be surprised to maybe see a dip down below this swing low here and then a rally back up. But that would require 5 waves down, and I don't see that we have that yet. Now, it's only 11:23 a.m. here Central Standard Time today, so we've still got another, 6-7 hours in the daily. So we could see a potential ending diagonal finishing off here, for way, again, this would be A, this would be B, and this would be an ending diagonal for C, maybe coming down here, and then a sharp rally back up for the end of the day. So, one thing is that would make the pullback to the daily S1 pivot, which would be, a decently strong area to pull back to. It's not even 70.5% on the retracement. 70.5% is your professional level, right? Your institutional level pullback. We haven't even hit the 61.8 retracement yet, which is the golden pocket, right? So as far as the possibility that maybe this is a wave 2, we're still early in figuring that out. So even if it came on down here to, 78.6 takes you into this this supply structure here, right? Oh, I'm sorry, demand structure right here, right? So even if we did that, it's still a very solid, possible wave 2. But that said, again, without it rallying back up, we still can look for it to head lower, right? So what I'm looking at now is, okay, let's say this is potentially, I guess the other way you could do this, and this would really throw some people off, is if this is 1, 2, and this is 3, 4, and this is 5 finishing out A, and then we get a B on the rally and a C back down and then back up, right? And so that's still possible. So we still have some things that need to work through as we go through here, right? But this is kind of what we're watching. My first thing is, does the daily close above, back up in this range here, above this swing low here at 27.15. If we can get that, I think potentially this could be an A, B, C, just a short C, and then done. But again, locally zooming in, coming off this top here, this looks like just, see, that's a higher swing high there, isn't it? 21.8, 18.32. Yeah. So, maybe A, B, C is 1, 2, and then we'd have to get like an ABC is 3, 4, and then ABC is 5 to finish that ending diagonal. The only other thing, it wouldn't make a whole lot of sense, but I don't know. I was thinking maybe you can get like an A, B up here, and then we go maybe ABC is 1, 2, ABC is 3, 4, and then ABC is 5. So we get this A, B, and then this C, and we're done. Now, if we do get a rally back up here that breaks out above this 21.925, I think that becomes a lot more likely. In that case, then we'll look for an impulsive breakout above this daily pivot to H4 pivot area, so the 22.250 to 22.500. We'll look for an impulsive breakout above that. And if we can get on that, I think that really starts adding a lot of support to the idea that wave 2 may be complete down here, and then we're heading up, right? Every time, as you kind of look at it, you can also look at WXYs and stuff like that. So that's why I think it's more important we just kind of watch the levels at the moment. And once you get an impulsive breakout above this area, your next target becomes the this R1 pivot, which, as you can see, right here is the EQ on the equilibrium area of this supply structure right around 24,233. So yeah, I mean, this is what I'm watching. Do we get a nice rally back and up through here, right? That takes us through the top here, impulsively through the pivots area, in which case then I'll be looking for that target up there. And to me, it'll likely suggest that the bottom's in, and this right here becomes a 1, 2 as I've got it labeled, which then gives us a 3 way back up here at around 31.5. So I'm just, with all the sideways, it's not worth it to be in it. It's a lot better to kind of just look at these larger areas and kind of see if that's what we're doing there. The 1 hour RSI is almost oversold. Stochh RSI is oversold. 4 hour RSI, Stochh RSI hitting oversold. Daily RSI, Stochh RSI had just broken out of oversold, so it could pull back in. RSI is right near oversold. So again, a lot of stuff, even if we drop down toward this S1 period by the, S1 pivot by the end of the day, the time frames are all suggesting some sort of rally. So if we get down to the S1 pivot, then we should look for a minimum expected target up here, maybe around 21,150, maybe this 21,550 kind of area, 500 area. So that's kind of initially what I'd look for, and then I'd look for that impulsive breakout above the pivots, and then this target up here, and then of course as we continue to break out higher here, we'd look for wave 3, minimum expected up there around 31.5. Again, if we do continue to break down through the S1 pivot, we're going to look at the count and see how it's looking there, but we still have a target, general target right there around 78.6, which is right around that 19,000 area. If we do break down below the swing low, again, we're going to look at this, instead of this being 3, 4, 5, we're going to look at this as 3 and this is 4, and we have a 5 still to go. And in that case, based off the high there, the height of it, yeah, right there around 14,000, 14,100 kind of area as the projected 5th wave target. But again, it's possible that we could just get 5 waves down that dip just below the swing low, like what I'm talking about here with this particular one. If this was, A, B, and C, you just need 5 waves down just below the swing low and then rally back up. So we could see that there, because again, like everybody here that wants to short, there'll be even more that want to short here thinking it's going down to $250 or something. And in that case, what is the greatest pain, right? And so you trap them bears, immediately send price upward, they're immediately underwater, they have to rush to cover their shorts, go long, and that just adds more fuel to the rally up, and then you get the big moves up, right? So yeah, we'll see that. But right now, it really is, on these various time frames, we are kind of close here. Right now, if you're new, you haven't seen me talk about this maybe, or if you don't follow me on Twitter, you might not have seen this. But historically, on the weekly, BLX here, which is that, the index, right? Every time Bitcoin has dipped and closed here below or in oversold, which has only happened twice before, right here at the 2015 bear market low and then the 2018 bear market low. But every time it's done that, it's led to the next rally up. Okay? The things are the same here when we look, it just bounces up here and then we get this range, right? Bounces up here, gets this range, and then goes up, right? So does it bounce here? Are we getting this range and then going up, right? Every time it kind of pulls back toward those lows, toward those range support areas there, right? Which is not the wick itself. Well, this one, there really wasn't a wick. But see right here, where the wick closes up, it just pulls back kind of that area. And right here, we could still pull back there. But it always does that, right? And so what happens is, every time as it rallies up here, this weekly Stochh RSI gets overbought, right? Here it is again, as it rallies up toward the the resistance right here. Here it goes again, right? It rallied up to the resistance, overbought, right? So everything's kind of lining up on that. If we look at hash ribbons have gone from the gray capitulation to the green, and so every time it does that on that, it then goes to blue, right? Which is your buy signal. So, again, everybody's extremely bearish, but maybe, we're ready to do this, right? Again, this right here is the 200 MA on the weekly. And so always around that, we had a dip here and back up. We were on it here. We've kind of pulled down below it, pushed up above it, pulled down below it. So we're right around it here. So, yeah. I think there's a lot to be said for this. Again, nothing's guaranteed on here, but if we're looking at what's happened in the past, no, future's never a guarantee of a repeat of what's happened in the past, but we've always had this same thing happen, so we'll see. this was 2018 going into 19, right? Let me go ahead and do something else here. I haven't done this yet, but let me throw on the dollar on this just to kind of see something here. Okay. Let's see here. So let me get this done. Let's put on logarithmic. All right. Let's see here. So interestingly, we had this large move up here, this big move up, right here, right? We've got this big move up right here again, right? We had this kind of sideways over here, kind of sideways. I mean, it still moved up, but a little bit different here. This looks a lot more like this here, right? In terms of the kind of movement we had preceding that low, right? We get this, lower high up off this. Right now we're getting a lower high up off it right here as well. Of course, we didn't have that at this rally up here. This was that whole, but this was kind of, you had this big March 2020 drop here, right? Across all the markets, right? Where the dollar shot up, right? So, I mean, we had that. That dollar, yeah, look at that, man. Look at this, guys. This is interesting. So if we look at the dollar here on this right here looks a heck of a lot like this right here, right? Just a bit deeper there, but this kind of overlapping move up, sideways, and then spike higher, right? Overlapping move up. Kind of pulled back a bit more here, but then we get this more or less this spike up. Oh man. So I don't know. This is the first time I just looked at that. I just thought about pulling that up. So this looks interesting because as I'll talk about the dollar in a minute here, it's looking like it may be topped out. And so we'll take a look at there. By the way, the dollar, you can't really tell it on this chart. You'll see it on the other one. It actually made a very slight lower high here. The euro has made a lower low. And so there's a discrepancy now. There's a divergence between the dollar and the euro charts. And so when it comes to, especially to currencies, when you have these major currencies like this that have this divergence, it's not required, and it doesn't always happen, but most often it denotes that there's a reversal, a larger term reversal happening. It's that failure to confirm. So, the dollar not printing a new higher high yet has failed to confirm the euro's lower low. And I'll tell you what, again, if the dollar's topped out here, we're coming back down. Guess what, guys? That's a risk-on environment, right? What that means is money is coming out of the dollar and going somewhere else. So when the money comes out of the dollar, most often it goes to risk-on assets, legacy, stuff like that. So, we'd be looking at crypto and whatnot as well, getting the money inflow, right? So I think there's a lot of different things you can look at on here that kind of say, well, maybe, right? And again, we talk about capitulation. We had two capitulation events here, right? We had the market capitulation right here, and then we had the three arrows over, deleveraging capitulation kind of thing going on there, right? Which also pulled in miners with it, right? And when miners capitulate, again, that's what the hash ratios are kind of showing here, right? More or less, right? Just generally. And so when the miners capitulate, that usually historically has denoted that a bottom is there or nearby. So I think, if you're looking at this, I think there's some great ways to look at it potentially to keep you from being overly bearish without confirmation. Again, none of this guarantees that price can't go lower, but you want to be careful that you're not becoming overly bearish when you haven't even had a confirmation of a bearish move down yet, right? Because I'll tell you what, guys, coming up off of this swing low here, this is, a couple of months back already. This is bullish market structure, right? We got lows, highs, higher lows, higher highs, all the way up through this, right? Now, it's possible this breakdown right here has not possible, but it's broken down this bullish market structure, right, to potentially bearish market structure is what I'm trying to say, right? But if we do have this rally back up there, it just starts another bullish market structure while also making this a larger bullish market structure, because then you look at low, high, higher low, higher high, which should then signal that the bottom is likely in and we're heading higher. Breaking out above this kind of, we'll give it this one over here. Oh, no, we'll give it this one over here. Kind of this 32.5 area. Breaking out above that means that this this bearish market structure right here has been broken. breaking out about above this one over here, and right there around 48,240, will give us market structure off the bottom here that's bullish, and it breaks this entire bearish market structure coming down from the swing high. So these are things that you'll watch if price advances. These are key areas that you want to watch because they tell you a lot more about the market structure, which then tells you, okay, what's maybe happening overall. Okay? Does that make sense? All right, let me kind of catch up with you guys here. I see you've been writing some stuff here. Let me see here. Blockchain Games, what's up, man? Always good to see you checking in. ARM, good to see you. Blaze, what's up? Poison's here. He says, still waiting on the test of the S1 pivot and then to long it. Yeah, we may get it, may not. We'll see, right? You'll notice that S1 pivot is right here in this, what is this, July 14th daily demand structure here. I mean, I could throw that on there real quick. Not every wick is important demand or supply structures. In this case, you can see that the EQ of that demand structure kind of almost aligns with that daily S1 pivot, which suggests that it is a significant area to watch as well. So again, break down through the purple structure, demand structure here, should lead to a target of that kind of 61.8 to 65 and percent kind of area right there around that S1 pivot. And then of course breaking down through that looks at maybe this next one here, which not only is this little bit here on this pullback and rally, but you've got this much larger support here. And you can see that 78.6 just kind of hits the top of it, right? So everything's kind of hit the top of it here. So here. And so that's, another way of looking at it, not just Elliott wave, but looking through supply and demand structures. So you've got these demand structures sitting here, and they give you these proper targets that you should be watching. By the way, you can also get supply and demand structures off clusters and whatnot. I actually teach this. One of the first things I taught when we started doing our weekly streams for Tier 3 back, I guess what's been about 2 years ago, guys. So it's a different way of looking at it that I've come up with that goes beyond just your simple order blocks and whatnot. And beyond your basic ideas of supply and demand. But there is a specific way to do it. But just as a real quick overview, what I just said there kind of is the way we look at this. So anyway, yeah, so it does give us these possibilities. And so we'll see. We'll see if we get that lower drop down. And we'll see if we get it. Do we get it today and we just kind of, finish out everything and then rally the heck back up all of a sudden, as the day closes? I don't know. We'll see there, right? Let me see here. Blaze says Dow down 400 points, knee-jerk reaction. Well, so far, yeah. We'll see. Again, nothing you don't normally expect with news events, especially lately when it comes to things like, Powell speaking, stuff like that. The markets are very on edge, with everything that's going on there. Nothing we haven't talked about. So we really kind of want to see, okay, well, so what happens as the day progresses here, and then how does the market open up next week? And I think that'll tell us a lot more about more of a midterm kind of which way prices may be going. In that case, we're talking about stocks, of course. But, this new lower low today, though, with the stock indexes, we'll look at those here in a minute, have really kind of, I think, increased the odds that top very well may be in. Doesn't guarantee it, but I think it adds a lot of support for that possibility. So we'll see. Let me see here. Hank says liquidity is low, which hampers rallies. Well, and liquidity is going to be low when you get to your accumulation phases, guys. Volatility comes in usually in distribution, right? Volatility comes in at tops, and then accumulation is usually a much more illiquid, kind of less volatile experience. And so you generally see, if you range there, right, you generally see volume drop off, right? Whereas in distribution, you'll see volume kind of stay up, you see it keep spiking up to the highs there. Because every time you get toward the highs of the range, all those big sellers keep selling into it, right? Accumulation, they're just setting orders on the bottom there and sucking up all that selling that you guys do. Until you don't have any more left to really hamper anything, in which case then price kind of just, makes its way up gradually, and then when it gets through the range high there, it kind of breaks out. You see some volume on that. So a lot of times new traders will come in, they'll say, well, how can this be a rally? Because there's no real volume as price is moving up. And that's exactly how, because nobody's really buying. Everybody sold, most of what they had coming down. So they're not in there to stop the rally back up, but people are scared to get back in. So the only people really buying are the big players, the professionals who see this as an opportunity to accumulate. They have different time frames, and whatnot. So they buy little bit by little bit as it goes up, because they don't want to push the price up too high too quick, right? They want to grab whatever you have that you're willing to sell at a lower price. And, you get to the point where you don't have anything left to sell, so you don't have any more of that supply coming in to hamper that movement up. So you're going to get that lower volatility at the lows. We'll see what happens with all that, right? Let me see here. Trading Jacob, what he said, entered a short this morning, but exited in longed. Regret it, but hey, that's trading. Yeah, again, guys, trading is not so much about your entries as it is about your risk management, okay? I've said this so many different ways, and I've showed a lot of professionals, who manage a lot of money, the different ways they've said it. But at the end of the day, guys, trading is just a game about minimizing losses. I mean, put most simply, that's what it is. And the one who wins is the one who figures out how to minimize their losses the greatest. And so if you stop and think about what I just said there, you'll notice that, especially if you're a new trader, that's a lot different than what you do, right? That's a lot different than what you do. And so the idea is, as a new trader, is to recognize what you're doing incorrectly and change that. Understand that you're going to take losses. That's just the game, guys. It is what it is. But it's not okay to take huge losses, right? You need to be systematic about your approach to trading. It's not about that single trade. It's about the culmination of trades. It's about a system that produces results over time, positive results over time, right? It's not that every trade is a new trade. It's that every trade is part of the system. And when you understand that, when you accept that, and you start trading that way, all of a sudden your losses are minimized, and you take a lot less of them, and your wins are increased, and you get more of those. You're still going to lose, but what you are losing is very limited. And it keeps you afloat for when you do win, because when you win bigger than a lot of those losses. Okay? Does that make sense? So, yeah. Let me see here. You're looking at volume on the 15-minute. Wow. Yeah, man. By the way, Dime, man, I appreciate you, man. I appreciate that you didn't get all upset about what I said, and you're still here. This is awesome. So, there was a lot right here. So as you hit the EQ, you see why this demand structure is important? Because you've got, look at it, it's just this right here, guys. And you have all this volume coming in, right? And it leaves this big wick in this small candle spread here, right? And so that shows you that there is significant demand right there, right around the EQ of this purple structure. I had my target just a little bit lower, as you can see right there, that red line, right? And we did get a bounce. But the second part to price action volume relationships and analysis is that this is the first thing you look for, right? Maybe a capitulation type move at the bottom, but then you have to have follow through higher. And in that case, we didn't get it yet. But what we did get is a move lower here toward this S4 pivot here on the 15-minute on much lesser volume, okay? So less selling going in, even though it did get a greater result. So, less effort, more result, but we could be seeing some sort of bounce area coming at least. And so again, if we look at, looking on the 15-minute here, we've got this reversal counter. So this goes, okay, maybe 1, 2, right? And you have this long wick. So 1, 2, 3, 4, I don't know, maybe 5 here, or maybe this is still 4 here. So it's A, B, we'll get a C back up to this 20,870, maybe 20,900 area to complete 4, right? So if this is 1, 2, and then this is 3, A, B, shoot, you know what? It could potentially rally all the way up here toward the 21,050 area, because we'd be looking at it as an expanded flat since it dropped down below where wave A starts. So it's only 3 waves up, 3 waves down right now. That's why I'm looking at potentially as a flat here. So expanded flat would say, okay, maybe rally up here to that 21,050 area, get rejected, come back down. But I think in that case, we get, potentially around this S5 pivot, we might get that 5th. So it all kind of depends on how we read this here. The other possibility is this is an ABC down as 1, 2. ABC is 3, 4. ABC is 5. But usually you want to have your ending diagonals overlapping, your 4 and your 1 overlapping. It's not that if it doesn't, it's invalidated. It's not invalidated. But it's much more rare to have an ending diagonal where wave 4 does not break into wave 1. Or, wave 2, however you want to look at that. And so you would need to see some further confirmation on that. But that's why I said, we kind of zoom out to that larger time frame and we look and go, okay, are we going to get a breakout here above 21,925? And then we look at those targets in the way I explained them later. Because if I'm looking at this range, man, God, this looks potentially like a bit of a either a really, really heavy spring or a terminal shakeout. If it's a terminal shakeout, it's more likely to go sideways before rallying up. If it's a really heavy spring, you should get a push up and then a pullback. And when it pulls back, it should print a higher low on much less volume than what you had here coming in. So again, just kind of zooming out to the larger time frame here, right? And that's what we would kind of look like or look for there. The only other thing when I'm looking at this, because on this 4 hour and daily, it's a very short area here. Here's something that would really just kind of really upset y'all, right? Go with me here. This is this big drop down, right? Your volume kind of comes in here. So I'm thinking, again, maybe preliminary support and then, selling climax, automatic rally, secondary test, up thrust here, becomes a spring and then move up, right? But, with all this volume coming in heavy here, what if potentially this area is the preliminary support and this becomes the selling climax? And so all of a sudden you should see a nice move up here, probably pretty close to this, to that 15-minute pivot right there. So you would see this range look something like this probably. So again, you get your preliminary support, you get the change of character on this, which is so much different. The one reason why I have a hard time with this being a wave 4 is because it's so much larger in terms of height and duration than what the wave 2 would be up here. And so that doesn't look right. And so Elliott wave is a lot about the look, generally waves 2 and 4 should be more or less proportional, right? Which should look like it belongs. This looks so much larger and bigger than there, right? That's why I'm saying this would potentially be an A and a B and then a C down. And so even if this is an ABC here somehow, right? Maybe going back to the idea, maybe we've got a WXY, right? So A, B, C, right? A, B, C, D, E. So this gives us a W. This gives us an X. And then W, X, Y, right? So again, saying this could potentially be done here, and then this starts the range, right? So you get this rally back up, automatic rally, pull back secondary test, break up into this range here, pull back, down here toward this purple range, get you your secondary test in phase B or your last point of support. Maybe no spring at all, right? In that case, there wouldn't be a spring. You just pull back this place and then you'd see a strong rally up off here. The fact that we're getting support right now after this big kind of capitulation candle, says that we should watch this potentially playing out. And so again, and so if we're looking in terms of, gosh, Doug, let me put that back there. If we're looking at in terms of pullbacks, we're just beyond the 50%, not quite to the 61.8. So again, still a really solid wave 2, right? So if we're gonna go down farther, we do need to see follow through on some volume, right? Right now, it suggests that we should at least get a bounce back up into here, and then we'll go from there and see, do we get that breakout up here? Can we go sideways? If we start going sideways here for a bit again, I'm really going to look at the possibility that maybe this is the selling climax down here, and we're going to get sideways. So we're going to rally up, pull back, rally up, pull back, and then break out on impulse and move up. Okay? So not saying we can't go down. We've already talked about those possibilities and counts and whatever, but if we happen to stay here and head up and start staying in this range, well, then it starts looking like maybe we'll do it. The other possibility, again, being that that this is correct here, right? So you got preliminary support, you've got your selling climax, automatic rally, secondary test, up thrust, and then you get this terminal shakeout, or like I said, a heavy spring, in which case you'll rally up, probably up to around, again, 2150, 150 area. And then you'll get a pullback and print a lower high on much lower volume. I'd be looking for that volume to be down around this area here on that. And so if you get that, that'll say spring, test of the spring, successful test, and we should look for a breakout, in which case in this area right here, you should expect to see large candle spreads upward and a nice spike of volume. That would be your jump across the creek. That would be your completion of this accumulation area here. So yeah, again, these are the things I'm watching for and how I'm watching for them and why and what they would kind of mean. But until we get some breakdown lower, looking at the possibility that maybe this is what it is at the point. And it would catch a lot of people off guard. Everybody trying to go short right here, right? Look at all the volume. Everybody trying to go short. But somebody's buying that. Somebody bought that. And somebody with a collective bit of money bought that. This isn't retail buying this. Right? That you don't get these large spikes from retail. Except up at the top there where they're buying into the top, right? But again, it's concentrated selling. It's professionals with a lot of resources that are selling into them, which causes the big volume, right? So yeah, because they keep selling into it even as retail's trying to buy. Often on the bottom, it's the other way around, right? You didn't really get any volume at the top here, a little bit, but look at this. You had more volume coming in this area right here, or this area down here, right, than you did in this area up here. And then you had this one move. So now you got to see. Now what this move does right here, you see, because it was a rally up and a sharp push back down. So what you're looking at is the market ready to go lower. And if you can't get a breakdown lower, then the money that shorted right here is going to take that as confirmation that the market wants the bottom right here, and will likely then buy in as you rally on up through here, get that breakout, and then of course you get, like I said, that large move up through that area down there. Does that make sense, guys? All right, let me see here. Trying to catch up with you guys. Yeah, unfortunately, Dime, that's not Scott's fault. Voyager, that was Voyager, doing its thing with 3 Arrows Capital and everybody else. I mean, that is what it is, right? I know Milker lost a lot of money with that as well. For me personally, though, guys, I didn't push any of that type of stuff because, as I mentioned to you guys back when you were asking me about it, I said, there's no way. There's no way you're going to keep being, there's nothing that historically that has this make any sense. That you're going to get all these huge returns over such a short period of time, interest rate, a huge interest rate. Like it didn't make sense. It didn't seem, as I think I said at the time, it wasn't sustainable, which is why I never pushed it. But, a lot of people tried and they made some money and then just kept it in there, kept putting it in there. But this is what normally happens with trade, with, just people, right? I mean, we try to make money easiest way possible, right? It is what it is, unfortunately. We got to be careful out there, guys. We got to be careful, especially when something seems too good to be true, right? I'm very conservative. Guys, when I trade, when I invest, stuff like that, right? So I stay out of stuff like that. Just again, because of what exactly what happened. Yeah, don't want to be caught in that. Do I think the Fed will raise interest rates only 50%? I'm sorry, 50 basis points now at Q3. I think the greater likelihood is 50 basis points in September. Right now, that's what I think. I think there's a chance we could get 75 basis points, but if we do, again, my thesis from the beginning of the year has been that would be the end of those very large rate hikes, and so we're just kind of waiting to see. So far, things have played out as I mentioned at the beginning of the year, almost exactly, and so we're going to see if this continues to happen here. I think that large CPI drop. Again, we expected a large pull down last time, but we got a surprise to the downside. So all we need to see is continuation of that, just another down period. And I think that really takes a lot of pressure off the Fed. Unemployment, again, if that drops off a little bit as well, that'll just be like additional support for the idea that, hey, they need to kind of pull back on that. Yeah. Richie Labamba, what's up, man? I know I'm kind of late catching up to you guys here. Yeah, man. Potentially a spring. Like I said, if it's a spring, there's 3 types of springs, 1, 2, and 3, right? And so this would be that really heavy spring, in which case it would require, after a little bit of a rally, it would require a pullback, a test of that spring. So usually it'll pull back toward this kind of area down here, give you that higher low into that wick. And then it would be, although on much less volume is what you want to see. If it comes in, if we get that a higher low there on a whole bunch of less volume, again, down in this area, that would be considered a successful test of that spring. And that usually sends price up through the highs and hell up. That usually says that the range is done. The spring or terminal shakeout's complete. We've tested it. The market's good to go higher. They're not interested in selling. And so then, kind of takes off there. Let's see here. So yeah. Let me see here. Trading Jacob says, yes, sir, 2% risk. So, hey, thankfully I'm not over leveraged. Yeah. Powell is foul. Yeah. Hey, Silvio, good to see you. Yeah, guys, again, it's all about risk management and whatnot. When you're in these areas, especially when you're in these areas, and zoom out, guys, when you're just kind of doing sideways, right? I mean, this is all we're doing here, right? This is still sideways. Significant area of support, right? Resistance, support area. That's right where we're at. So until you get some kind of real trending, something like this to the upside, if you're using leverage, you definitely don't want to be using that leverage down here. This is all just kind of sideways. It's chop, right? So, you definitely want to be careful with that as you do that. Now, if we're honest here and we look at this as far as diagonals go, right? Diagonal support resistance. We basically had a rally up into the resistance here, the support working as resistance and a rejection. But again, from this, we still need to see follow through lower on these larger time frames. If we don't, and instead it rallies back up above that swing high into there, then we say that this was just basically, again, in terms of, you can look at the range as this right here, potentially accumulation going on here, right? Volume dropping off as we're rallying up. And then this right here becomes your terminal shakeout. Usually with terminal shakeouts, you have sideways before it breaks back up into the range. A spring will break down, pop right back up into it. Something like this here, right? Drops down, pops right back up into it. Or like this right here, right? You can see a spring right here. See how you've got this wick right here with this large guy, and then it comes back and tests. And look at the volume on this test here compared to this volume right here. This was that swing low, right? And then you pull back and tested it on this volume down here. That's the kind of thing I was talking about on that lower time frame, what we want to see to kind of say, okay, successful test. And sure enough, look what happens there. It goes up, right? And even here, it pulls back, continues up, and it just continues up higher. If we look at this range here, potentially, as accumulation happening here, I'm not overly convinced by the volume, but I think there's enough in there to say maybe. So this big volume spike here and this big candle drop below becomes your terminal shakeout. This becomes the range that develops, and then you get a move back up into it. So again, looking at the larger time frame, maybe, right? Maybe. All right. Let me see here. If inflation is their main concern, how are you doing there, Chris? Then why still printing with stupid decisions like inflationary reduction, state stimmies, and loan forgiveness? Obviously, crooks buying votes. Well, yeah, we know, again, guys, yeah, as I said, the whole loan forgiveness thing and the extension of the pause on the moratorium on student loan payments, that was all but a given, guys, right? Because, with inflation, everything going on, people automatically blame, Democrats because they're the ones in office. They hold a slight margin, in Congress. And so, the president's going to do what he can to make, Democrats look good, right? I mean, it's just, I'm not a fan of Democrats. I'm not a fan of Republicans. I'm not a fan of any politics, right? It's all about exactly that. It's all about buying votes. It's all about coming in and telling you what you want to hear and usually not doing it or anything, or you do very, very little bit of it, right? So, that's kind of where we're at with all that. No surprise. But anyway, so here we go with this. Let's go ahead and jump ahead here, guys, real quick. So now I'm looking at, this is the dollar, right? This is the DXY. And looking at it looks like ABC 1, 2, ABC 3, 4, ABC 5. With a, what we would call a throw under of the wedge here that denotes the end of wave 5 and a sharp rally back up. So this action right here most often denotes a wedge, right? Or in this case, it would be a leading diagonal. And so if this is a leading diagonal, initial target, as I've got it here, is the wave 4. But it could still, it could still pull on up here toward this R1 pivot. But, if I'm looking at this, I think it is a good argument for potentially being a leading diagonal. Now, if that's the case, again, as I talked about, that swing high is just barely off that swing high, but it's still lower. It's not a higher high. Whereas the euro, which, again, makes up over half of the weighted value of the DXY, right? It is the most influential price in the weighted mix here on the DXY value, right? And it made a lower low. So you're getting a non-confirmation at the moment here, which could suggest that this is 3, this is 4, and then this is potentially just a very, a truncated 5th, truncated by like less than a point. If there's going to be a truncation, that would be the best way a truncation looks, right? And then also potentially prints this double top here, right? So now we need to see, what are we looking for? Again, like everything else I've been talking about, we're looking for follow through, right? So if this is correct here, then price has no business getting above the swing high up here at 109.270. We're looking for 3 waves up that get rejected prior to that, and then a breakdown below the swing low here. And if we get that, then we start looking at 1, 2, and 3 down. And again, if that's happening, that denotes a risk-on environment because, again, as the dollar rises is kind of like that canary in the coal mine, right? If the dollar's rallying, it's because people are concerned, right? Because people are concerned about what's going on with the economy and everything, so they put their money in the dollar. Because, it is what it is, guys. Very, very amateur armchair economist out there talking about, all this money printing, blah, blah, blah. It is so much bigger than that, the whole system, right? And so there's so much more to it. But basically put, if the dollar's rallying, it's because in general, people are fearful of what's going on with the markets. And if people are fearful of what's going on with the markets, that's risk off, right? They're taking their money off out of the risk, right? Stocks, crypto, these are risk on type assets, right? If the dollar turns and heads back down, then people are pulling money out of dollars, right? And so if they're pulling money out of dollars, where are they pulling it? Well, they're pulling it out because they say, okay, well, the environment looks better. And so I want to put it into more risky assets. So again, if this is the count here, then in general, we should expect that Bitcoin, even if it pops down a little bit lower, we should expect that it, ultimately rallies, as do, stocks. So, and here's the thing, guys, if you're looking at stocks, I was just looking at this with the tier 3 here yesterday with our Elliott Wave weekly session. And we were looking at things, man. You can look at things like BABA. You can look at things like Microsoft. Roku, all these tech names that have fallen off, Meta, that have fallen off quite significantly, and then they've rallied well here, and there's a good possibility that maybe they've bottomed, or they've got one more slightly lower low to go, but that they're pretty dang close because they've dropped back 78.6, 85.4%. So that's something else I'm watching there as well. All these techs have taken all these big moves down. It seems like they would be closer to being done than just getting started. And the indexes would be just getting started, right? So again, just other ways of looking at everything's going on there and taking in more data points from different areas and kind of figuring out, well, what does it maybe mean? Mark, have a great day, bud. Let me see here. Okay, so that's what I'm kind of looking at here. So we'll see. If we break out above the swing high here, then, we still potentially have higher up there. That daily, though, look at that daily. We are up and overbought. 3-day, we're almost back up to overbought, but, we're on a downtrend here from back in May on RSI. Weekly, we're just kind of hovering around around the oversold down here, but we are well overbought. Let's see here. When was the last time we were kind of on the weekly doing this? Where we were, last time that we were kind of really, we kind of peaked out and overbought here, and we were overbought here. Then it moved down. This one over here, we were overbought. Coming down out of it, spent a lot of time down in oversold. Ultimately lower, then higher, and then back lower again. So we've got this, so are we looking kind of at, potentially the same idea here that we had here with that, right? Maybe. Where else do we have it here? We had it here, but it didn't stay elevated while we reset. I'm looking for something that stays elevated around overbought as Stoch RSI gets to oversold there. Is what I'm kind of looking at. I think that's probably the better one right there. This one right here got interesting. So we were overbought up here at the top. Yeah, but it still kind of went down after we went down there. So not a whole lot of examples of that where it remained overbought and then kind of dropped into oversold. So, don't know if there's anything we can really tell from that particular kind of thing. Man, wish there was. Be a little bit nice to have some point of reference, but yeah, so we'll see what happens here. I can say from trading pivots, again, this is that thing. If you guys have been following me for a year or longer, this is the same thing I've told you on so many different charts. On pivots, and listen here, man, this is worth its weight in gold here, guys. If you come in sideways, it doesn't matter what time frame, if you come in sideways between the pivot and the R1, and price rallies through the R1, does not come and test the pivot, just rallies up through the R1, kind of stays up in this area, and then rallies up, breaks out again, most often that's going to get you the R4 or R5 level. Okay? That's a very bullish signal when that happens. Because most of the time, if you come in sideways between the R1 and the pivot, if you're at least somewhat bullish, you'll rally up to the R1 pivot, pull down to the pivot, and then break out higher. Or you'll kind of come in sideways, drop to the pivot, and then break out higher, right? In this case, you're just coming in sideways between the pivot and the R1. You're not even pulling back to the pivot, right? You're just hitting the R1, kind of pull back locally, breaking back out again. So that tends to be a very bullish move. I think I showed you this back here on the weekly earlier this year that this was setting up and talked about it rallying up there. So, yeah, maybe this goes up higher here on the weekly. Yeah, we've only got one candle in the opposite direction there. Yeah, maybe it's an ABC. I can see that maybe on that weekly. But your 3-day then starts looking down. 3-day looks like 1, 2, 3, 4, 5. But then you did get this move up, and so this becomes then an ABC up, right? Because it didn't break out higher. So again, we look for potentially moving down. This 3-day candle looks interesting here. This started back yesterday on the 25th. So it's still got another day after today before it closes. So we'll see how the beginning of the week looks on this 3-day on that. But again, daily. See, daily looks kind of good here as well locally. Looks like it could be maybe an ABC there, right? On the rally up from here, it looks like an ABC. So yeah, I mean, I guess if you look here, it looks like maybe 1, 2, 3, 4, 5, and then ABC, right? So it just all hinges on, do we break down lower or do we break out above here? But even if we just break out above here, we might only go up a little bit further just to finish it out. Kind of like what I was talking about Bitcoin, where we drop a little bit below, get us a spring, and then move back up. We could potentially just see a move out higher here, right? This is the futures right here. A lot of volume into this 1 hour here, as you can see. But let's zoom out here to this larger time frame here. See, if I look at this as a range here, if I'm looking at this as, is this distribution or accumulation? You see how all this volume stays up here? You see how that's different than Bitcoin? See how Bitcoin kind of comes down here like this? And the volume only really kind of spikes up here, right? Overall, it kind of just continues down lower. High, lower, high, until this, right? So, looking at this as potentially accumulation due to that kind of volume profile as compared to this, which has continuation of volume, right? Look at the volume that came in at the very top here. This spike of volume, let me see here. Volume in this, God, it's not even the top there. This is more volume at the top here than there was at the top here. You see this right here? And so when you have all this continued volume around those same levels, all spikes all up toward that same top, most often that denotes a likely distribution area. But it's still way too early to tell, guys. We've only got one down and one up. But the fact that there's all this volume here has me cautious about further upside. But again, not only do you need the volume price action relationship, but then you need the follow through. So again, this could be showing that they're trying to sell here, but they need follow through to continue lower. So we'll look for that, right? Train Jacob says, want to know that the indices just getting started is bottoming or is more downside? So let me see here. So we were looking at this, and I was looking, okay, maybe, I've kind of talked about this, maybe because of the extension here, we've gone up just over 50% on the Hank, that doesn't matter. Don't worry, bud. That actually, you say it's not based on trading. This is based on trading. This is futures. This is trading futures on the ICE exchange. So this is based on trading. Okay? All right. So I'm done talking about that. All right. So here we go. So now we've got this move up, right? And so we have this extension here. So this move up is 2 times this move up right here. And so that has me leaning toward, the possibility that maybe this is a 1, 2, 3 coming up here, right? So leading into this, we have this maybe as a 1, 2, and then 1, 2, and then 1, 2, 3, 4, 5, right? So that gives us 1, 2, 3, 4 here. But we were basing this on the fact that maybe this was an ABC right here, but now we've got a lower low, right? So now it looks like 1, 2, 3, 4, 5. So, is it possible that maybe wave 3 finished here? Sure. I mean, it's possible. And in that case, we're near the 38.2, which would be the first wave 4 target. The 50%, as you can see, is right here at the daily pivot. So I'm going to hold off judgment for now. Again, quite possibly wave 2 is complete here. And if we break down below this swing low at 10.850.01, that should signal that wave 1 is complete, wave 2 is complete, and we've got a very big, very painful wave 3 coming in. Okay? For now, you know, again, maybe this is actually 1, 2, 3, 4, 5, which gives us 1, 2, 3, 4, you know, either at the 38.2 or the 50 here, and then break out higher. So if we pull back to this area and then break out higher here, I'm going to say that this is what I just talked about there. Let's see, 1, 2, 3, 4, 5, gives us 3, gives us 4, oops, gives us 4 here, and gives us 5. And so it kind of keeps alive the possibility that maybe that bottom may be in. Now, this is the NASDAQ composite, and as I just told you, BABA and all those others already pulled back 78.6, 85.4, and this would just be wave 2 on the pullback, right? So how does that play out with the large tech stocks, which make up the bulk of what is the NASDAQ? It does. You see how there's that disconnect there? So I think we really have to keep open with the idea that maybe, you know, instead of the black count, we've got this red count kind of going on here, right? And so look for 4 here, you know, and so I don't know. If we hit that, we could be seeing it going up here as high as 14,016 area. If it only gets to 38.2 there, 13,788 or so. Whoops. 788. Way too many numbers in there. And so that's what I'd be looking at it and do. And so if we get this as a 1, 2, 3, 4, 5, guess what, folks? We'll get three waves back toward this area here, and then we'll break out higher. Now, is it just an A and a B and a C? My big problem with that is that wave A will have gone all the way up here almost to 70.5. And that's really, really deep. It doesn't say that it can't be, but on something like that, you know, you'd be looking at getting almost to 90% up here. So you still have to be cautious. We still need to break out above the all-time high to say, well, this is, you know, that this is wave 4 and we've still got wave 5 to go. But, you know, if we're getting something like this, I'm leaning toward the idea that this is going to be a 1, 2, and we're headed up, you know, much higher, heading up through there. And so not just here, but the same thing with the other ones as well, right? So you see our daily, we're oversold here. That 4 hour, we're getting close to oversold. 1 hour, you know, coming off of just above oversold here. So we would expect to have a little bit further back there to kind of get to that, right? But I think it does, you know, and this is coming from somebody who, you know, has been talking about the top potentially being in there. But, you know, again, guys, the most important thing is as there is new information coming in, you have to be willing to roll with it. You have to be able to understand what the possibilities are that may be going on, right? And until we break down below this swing low, there is the possibility that maybe this is just wave 4 and wave 5 is still got to go. Okay? So we've got that right there with the NASDAQ. Oh man, I got to get ready to go here. Let me see here. S&P, guys, looks like... We'll look at the E-minis here, right? All right. Let me see here. Okay. Yeah, so again, look at the idea that maybe we got 4 down. Or again, maybe this is ABC as W and then X, and then maybe we'll get an ABC down here for Y, right? In that case, let's see here. Oops, wrong one. Because you can see that we've already rallied up here 61.8, right? So 38.2, again, is right here at this 40.80 kind of support. 50% is right around the daily pivot, right? So again, same idea here that we would have with the NASDAQ, right? The idea that maybe this is 1, 2, 3, 4, and then we get a 5 up higher. And depending where it goes, if we kind of hit the, if we go just a bit further, I think we go further than this, but if we do just get to the 38.2 there, we're kind of looking at this 44.85.50 kind of area. Okay. And if we continue down here to the 50% right around the daily pivot, I think it's this target up here of around 45.36.50, right? And once again, and this is even more than the other one because this one gets us up here finishing out not at 70.5. It gets us finishing out, it would just be wave A at 78.6. It's rare that wave A gets anywhere near that height, for an ABC. So yeah, we'll see, right? The only other way I think maybe that works is if this is an ABC, which, would potentially be if we're breaking out higher, right? But this would be an ABC, and then we get an ABC up, and we'd actually be building a flat here. God, can you guys imagine that? Hitting breaking out above the wave A swing high here, and then coming back down below here, so you go A, B, C to finish out wave 4, and then you have wave 5 up. Just looking at possibilities here, also a possibility. If this is going to be a wave A finishing way up here at around 78.6, that's going to be a wave A way up there. Well, then A, B, C is probably going to carry to a new high. So this would have to be ABC here, or WXY, and then that ABC up, and then 5 waves down most likely would carry below, because it would be an expanded flat, would carry below the what would be the wave A swing low here. Now the other possibility on an expanded flat is that it only pulls back partially and it becomes a running flat. So lots of possibilities here, guys, right? Lots of things that go on, but we would just continue to update counts as we're working our way through it, right? If Bitcoin is near a bottom, wouldn't it mean the same for indices, or is the correlation different? I'm not a big fan of correlations because they only work, it's kind of like news events, right? They happen and then you go, oh, look, it's because it happened. But, the news events and the price action happen all the time. We just tend to give it significance when it satisfies what we're looking for, right? When it kind of confirms what we're looking at, right? The same thing with correlations. You've got all different sorts of correlation models that people throw up, right? That they throw up out there for you. And, one day it correlates, the next day it doesn't. And there's always an excuse why it's changing, right? But at the end of the day, either it correlates or it doesn't, right? And so I tend to look at things that way. I tend to say, okay, well, either things are a certain way or they are not. Because that simplifies my trading a lot more, right? It limits the amount of times that I can be significantly wrong, right? And I would suggest that for anybody. But again, if Bitcoin's near its bottom, as we're suggesting maybe there, right? Then yeah, the Bitcoin bottom potentially was June 18th, right? And I'm still talking about that as the likely bottom, right? Keeping an eye on, of course, new information comes in and we could break down as I, gave you those targets earlier. But again, you have that same drop here on the 16th of June, I'm sorry, 17th of June right there, right around the same time, right? So if you are into the whole correlation idea, well, hey, if you see that the index is breaking out higher, then you should generally expect Bitcoin to break out higher, right? Yeah. A lot of people make a big to-do about the fact that, there's been a lot more movement here than there was in Bitcoin. But, the stock indexes, they're this grouping of a whole bunch of stocks, right? Whereas Bitcoin is this idea that either money goes into it or out of it, right? And if the market's bullish overall, well, again, it's this idea that Bitcoin moves and then alts move, right? Or alts move and then Bitcoin moves, right? So outflows from Bitcoin go into inflows and alts. And then we see that since the bottom here in things like Ethereum. I don't even know all the ones, right? BNB had a good move up. So there's been a lot of good moves up, much more significantly than Bitcoin, right? They dwarf Bitcoin. But I think you can't really compare Bitcoin to a stock index for that reason. The stock index moves in relation to all those that are moving, whereas Bitcoin is going to necessarily, at least have a slower rise if the money is going into the alts, if not pull back a little bit, right? Because the money leaves it, or not as much money comes into it as it goes into the other ones, because those alts don't make up Bitcoin, right? Does that make sense? So don't listen to anybody who's talking about that particular thing that's going on here, because it's apples and oranges. It doesn't make any sense, right? So yeah. So those are my thoughts on that, guys. And again, I'm just a guy doing a thing out here, right? So I could be wrong about everything I speak about, right? But, as long as you're doing proper risk management, you're going to be all right, right? As long as you're doing it, you're going to be right. And so, the goal is proper risk management. As long as you can do that, you're going to protect yourself when you're wrong. And when you're newer, you're going to be wrong a lot more often. And even as an experienced trader, you're going to get on streaks sometimes where you're wrong more often. It is what it is. It's all part of trading. But that's why trading is about developing a system to trade consistently, not just looking at every new trade as something new and trying to do something new and trying to do something different. Okay, guys? Does that make sense? You don't want it to be that. All right? You want your trading to be a system that you employ over and over again. Rules-based system. You got definitive reasons for entry, the same all the time. You've got definitive reasons for your stop losses, where they're located, the same every time. You have same reasoning. Your profit targets, the same reasoning. It has to be. If you look at every trade individually, I promise you will not get anywhere where you want to go. You will not be a trader for any length of time unless you continue adding more money in. This is the big secret, guys. Two big secrets to trading. One is risk management, proper risk management. Two is that, professional traders, we use systems. We create systems, or we use somebody else's system that is consistently profitable over time. We don't worry about a single trade or even a skew of trades. What we're interested in is what's happening over time. Are we consistently making money over time? Yeah, so that's what we're doing there, all right? Yeah, trading is definitely not predicting, okay? There is a difference. Everybody's like, your predictions and your calls or whatever. No, I don't call, I don't predict. I forecast. And forecasts are based on the information available at the time, which means forecasts can change as new information comes in, right? So I saw somebody look like making a joke there about who's right more often, weatherman or analyst, technical analyst, or I guess any analyst really. But really, we're all working on the same idea, right? The same idea is, listen, at this point in time, this is what we believe is likely to happen. But if information changes, if new and different information comes in over the next few hours, the next few days, or whatever, depending on our time frame there, it could very well change what we think is going to happen. And I'll tell you what, those that are successful as traders are the ones that understand that and remain fluid and understand the proper risk management. If you don't understand what I just said there and why it's important to understand that, then, guys, you're going to be really hurting. There's no easy way out of it if you can't get that, if you can't internalize that. If you think you always have to be, put out your idea and that's it and it can't change. And if it changes, you're not good. You can't stop. If you're thinking that, either one, you're misinformed, right? Or two, well, you're misinformed yourself, or two, you're misinformed by the nonsense on social media. I see so many people with great potential as traders. You guys sit here and you DM me all day long. And you sit there and you put yourself in a bad position because you keep worrying about what some idiot online says. Who cares? Who cares? You're not going to be able to do this for, 25 years. Peter Brandt, 40 plus years. If you always worry about what some idiot, it has no say so on your account at all. No, they're not making you money or losing you money or anything. They're just jabbing, right? You're never going to make it any length of time as a trader if you're always worried about them and what they're saying. Who cares? They don't care about it. If you think something's going to happen and new information comes in that changes it, don't be afraid to change what you think is going to happen. Okay? You've got to do that. The markets are ever changing. Nobody has a crystal ball that tells them exactly what's going to happen with the market. There are no guarantees in trading. right? All right, guys. So hopefully that makes a lot of sense, guys. As always, remember the only thing you control in the market is how much you lose. That's absolutely it. All right? So keep working on that risk management. I'm going to do something next week. I'm going to give out a whole bunch of free stuff. So, guys, make sure you're following me on one of our social media platforms. I think it's going to have to do with TikTok, but I'll make the announcement across everything. So if you don't have a TikTok account, I'd suggest you get it, because you're not going to want to miss this. Completely free. Doesn't require anything from you other than to check in and see it. Okay? So hopefully, you guys will jump in on that. And here's the thing. Yeah, okay. So the more people that have followed me there on TikTok by Monday when I do the first thing, the more of I'm going to do. Okay? I'm not dancing for you. I'm not singing for you. Well, I'm going to attempt to make you some money. We'll leave it at that, okay? It's not going to be a, hey, you got to buy something or anything like that. It's completely free. Nothing on your end other than to watch the video. So, I do have an account on there. Man, oh man, what is it? Let me see if I can find it. I'll tell you guys what it is here real quick before I go. God dog it. I've never posted anything on it. I had it because I figured maybe we'll use it at some point. Somebody came across me with this idea, so don't even think this was my idea. Somebody else's, okay? See, I don't even know what my thing is. Oh, let me see here. How do you spell TikTok? See, I don't even know any of this. So it should be fun. Let me see here. Yeah, I know, just another social media thing, right? But I don't know. I think it'll be a good platform for this. I think it's probably the best one. So, gosh, dog it. I don't even know what all this noise is. Good times, right, guys? All right. So now, let me see here. It is. Oh, look at that. Inks C13. Okay. We'll do that there. That's the other word. At Inks C13 on TikTok. Okay. I'm not sure that I'm gonna even like doing this because, it's TikTok. I've never actually used it. Not really sure how to do it. I'm figured out this weekend though. And we're gonna do that. Okay. All right, Hank. Well, you miss out. It's okay, man. Like I said, if you guys want to do this, you'll do it. That's all we're going to do. It's the only place I'm going to do it at, though, because I think the platform probably works better for it than the other platforms. That's the only reason why I'm thinking about it, why I'm going to do it there. But it'll be during next week, all throughout the week, okay? So I'll post a message on there, however that works, prior to it, let you guys know what to be looking for, when to be looking for, and whatever, okay? All right, anyway, guys. So there you go. I am not dancing on TikTok. I don't know, maybe I can hire somebody to put together a little skit. No. Anyway, listen, I'm going to get out of here, guys. Just get out there, trade safe, guys. Remember, it's all about the risk management, okay? Don't worry about what some Yahoo online or even in chat says. Change your ideas when you need to, as long as there's new information coming in that supports that, okay? Understand where your validation and invalidation levels are. Be smart about your trading. Look for the higher confidence entries. This is how you do it. All right? All right, guys. So, hey, listen, you guys have a great weekend, and I will see you there on Tuesday, I guess. If you don't join us over at Discord before then. If you do, I'll see you guys there. If not, again, I'll see you guys on Tuesday, 11 a.m. Central Standard Time. And then, of course, if you jump on TikTok there, you're going to get some that you probably like. I can't imagine you wouldn't like it. Has to do with trading. All right. All right, guys. Have a great weekend. Take care.